Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 28th of October, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Now, if you're listening in the US, you're picking this up at the normal time. If you are in anywhere else on the planet, apart from, I believe, the UK and Europe, you also listening to this at the normal time. However, if you're on live and you're in UK and Europe, well, you might not be on live because the clock's changed. We moved off of daylight savings time in Europe, EU, UK, European countries this weekend. So we're going to stick with the time zone for the US. So we're going to do it the same time zone as the US. That means it's going to be an hour earlier. That's just for this week. Then the clock's changed in the US next weekend. And so that changes us if we're in UK and Europe, which I am in the UK. So I'm actually doing this 1 hour earlier than usual here in the UK. So for this week only, if you're in UK and Europe, it's going to be 1 hour earlier than usual. So it's 11:30 Eastern, 11:30 UK time in here at the moment, 11:30 GMT. It's 11:30 GMT plus 1 on Central European time. So European time, it's going to be at 12:30 now, just for this week. If you're in the US and for most of the rest of the planet, things haven't changed for you and they stay the same. If you are in the rest of the planet, though, please be aware that next weekend the clocks change in the US. So for you, if your clocks do not change, which for most of the planet, if you're in Africa, Middle East, Asia, your clocks do not change, and therefore your times will change in relation to the US as of next weekend, not this weekend, as of next weekend. So please be aware of that as well, guys, going into next weekend. That it's not just a webinar. You have to be aware of the different times of the opens and importantly the closes, because remember you have to close out of all positions. So please do check what the time is for you relative to the US now if you're in the UK and Europe, and also what the time is relative for next weekend if you're on the rest of the world. Then checking what time it is as of after next weekend. So that's the geopolitical time zone lecture over with. Let's move on to what's been going on in the markets. It was a fairly quiet week for the markets. I'm going to look at the macro matters there. These both are below where you are watching right now, whether you're watching live or if you're watching the recording. It's not below if you are watching on YouTube. If you're watching, if this is posted on YouTube, then you're not watching it. You won't be able to get this. This is only for our members. This is our members area. So in the members area below where the live streaming is, we have 3 columns. The left-hand column is the technical analysis. That's where all the charting, the market chart is charted, which we're going to come to shortly. Here they are here. And I said we did have someone on the sent in a message saying, we can't see the levels in here. Well, they're all downloadable. You don't have to get them from here. This is not meant to be. I'm just kind of just showing you that we have these available. These are not meant for you to look at the levels and zoom in and pause on the levels. You have access to those levels below anyway in the first column. In the second column, we have our macro fundamentals. So we have 2 reports we put out the weekend. The longer form is the macro matters, which goes into some depth about what's happened and what's coming up. The short form is the macro summary in here, which is a short form of that, basically a summary of that macro matters in here. So we're going to go through those first of all in here today. So starting off in here from last week, markets were basically slightly dipped lower, but the underlying bullish theme is still there. Tesla did surge higher, so the Nasdaq actually looking better than the S&P in here at the moment. And when we do come to the market charts and levels, you see on the S&P we've actually gone negative because we took out some support. We're on the Nasdaq, we're staying positive, so that doesn't happen very often. Technically, they're not going to be unaligned. We're not going to keep that view. Obviously, it's going to depend where we're going to break, and this is a critical week. The Fed enters its blackout period, so we have the Fed meeting in here. It's different to usual. I stressed this last week. It's on the Wednesday, Thursday. If you look all throughout, and historically the Fed meeting is Tuesday, Wednesday because of the US election that we have coming up next week. To not clash with that election, the Fed meeting has been moved to Wednesday, Thursday. So it's the 6th and the 7th. So we get the decision on the 7th. However, the blackout period has stayed the same. It's the weekend before the week of the meeting. So the weekend before started this weekend. So from this Saturday, the Fed went into blackout. So no Fed speakers this week or next up until the meeting on the 6th and the 7th. And it runs through into the 8th as well. And that's when the blackout period is lifted for Fed speakers. So we've got all that going on from this week. But going back to the macro matters, so US average is slightly, yes, Tesla did surge. We spoke about Tesla's numbers in here, up 22% on the day on Thursday, best single day since 2013. Lots of positivity coming out of Elon Musk and out of the numbers in there. The main focus really, though, is going to be on a big week for earnings plus US jobs. It's a big, actually 2 weeks coming up. So not just, really the big thing is, most of it is coming in this week. And if we go down to the data in here, so there's my note here on daylight saving times changes in UK, EU and other European countries, and then that changing next weekend in the US. On the central bank side is fairly light. Bank of Japan interest rate decision monetary policy statement on Thursday, but the real focus is going to be on the not just the macro data, but more importantly even than that is the micro data, the earnings data in here. The macro side in here, macro data releases week. US employment report is the big standout, as it always is on Friday. So we get the US employment report on Friday, and as ever ahead of that on Tuesday we get the jobs opening report, and we get the ADP employment change. That's the kind of the private version of the not the public version, but the government version of the US employment report. So those are all going to be important next week. Sorry, this week, excuse me, this coming week. Tuesday, JOLTS report, ADP employment change, and US employment report. Plus, on the first of the month, we get, I'm not quite sure why, but we're not getting the European data released. It usually comes out on the first of the month for the PMI data, but we do get the US, Canadian, Chinese manufacturing PMI data. But the European data, European, UK data, not coming out until next week. But on Friday, the 1st of November, US, Canadian, Chinese manufacturing PMI, also the ISM, that's from S&P Global, but also the ISM PMI data also on Friday. And then also in here we get the US GDP data in here, PCE data in here. Remember, that's the Fed's preferred measure. We get GDP on the Wednesday, on the Thursday. So that's a huge week. We get the US PCE data, inflation data. We get the employment report also on Friday in here, and we get the ISM PMI data on Friday. So it's Thursday, Friday, really chock full of US, really important high-level US data. Also get that US GDP data in here on Wednesday. So that's all on the macro side. But also on top of all of that, right? On top of all of that, we hit the peak earnings season we've got of the Magnificent Seven, and we have 4 of the Magnificent Seven reporting. Oh no, excuse me, 5. 5 or 4 or 5. 1, 2, 3, 4, 5. 5 of the Magnificent Seven. So we've already had in here Tesla last week, as we said, a huge rally on Tesla. Nvidia always reports really late at the Magnificent Seven, so we will get Nvidia. We won't get Nvidia until something like the middle of November, maybe the second or third week of November. But what we do get is the other 5. So this week, Alphabet, aka Google, on Tuesday. Both Microsoft and Meta on Wednesday, and then both Apple and Amazon on Thursday. So it's an absolutely humongous week in here for earnings, okay? 5 of the Magnificent Seven reporting between Tuesday and Thursday, okay? So nothing of note today, but the 5 of those between Tuesday and Thursday. And then we have all of that data Wednesday through Thursday, starting off with the GDP and ADP employment from the US on Wednesday. And then on Friday, we get the PMI. Sorry, on Thursday. No, so on Friday, we get the US PCE. Thursday, the US PCE, the inflation report, and then the ISM PMI data and the US employment report all on Friday. It's an absolutely humongous week for US macro data and for US earnings data. Okay, I cannot stress that enough. And then remember, just then into the week after, we have the US election and we have the US Federal Reserve decision. Okay, so 2 weeks. I mean, there's going to be so many opportunities. As you can see in here today, nothing of note. My strongest advice to you: there are going to be so many opportunities. You know, day trading is usually, not always, but usually easier, a little easier if we have some volatility, right? Obviously, you might need to scale down your trading size, but there's going to be plenty of volatility from Tuesday right the way through this week, through Friday, and then going out. It might not kick in until Tuesday after the bell with Alphabet, Google, but we do have the JOLTS jobs opening report as well. We also get US consumer confidence. Sorry, I forgot to even mention that because it's almost a small piece of data compared to everything else we have. So from Tuesday right the way through Friday, we have huge earnings reports. We have huge data on the macro side, and then going into the week after, you've got the US election and the Fed, right? So please keep your powder dry, as we say. Don't blow accounts today when we've got nothing of note coming out, unless your account is needs low volatility. Sorry, not your account. Unless your trading strategy needs low volatility, then obviously today is looking like a good day because we've got nothing of note on even the macro side or on the earnings side in here. But if you do better in more volatile markets, if you need some price movement to get your strategy going, then certainly this week is going to be huge for that. Okay, so I'm not going to go through all that again. That's pretty much repeated in there. There's the Fed calendar in here. You can see in here hardly anything in here today. We've got just nothing, nothing of real note in here. 2-year, 5-year note auctions in here. So nothing of note on the macro side. On the earnings side in here, you can see in here as well, nothing of significance really coming through in here today. So very, 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 very quiet. But then tomorrow it's kind of really kick off with Alphabet and then obviously the data as well. What else we have from the major news wires in here? Well, here's the morning briefing, the US morning briefing here. Donald Trump supporters flocked to Manhattan and cheer incendiary remarks against Kamala Harris and minority groups. So also the real big thing over the weekend, oil slumps after Israel limited strikes. So the strikes from Israel over the weekend on Iran were limited. The rhetoric coming back from Iran was fairly limited as well. It looks like we're de-escalating. Obviously, everything is still going on with Gaza and Lebanon, but the focus between Israel and Iran looks like slightly to be de-escalating. That's seen as a positive. Oil is down 5%, and lower oil price positive for Israel strikes against Iran, avoiding its energy facilities, the attack. So, and they didn't hit the energy facilities, so they didn't hit the oil as well. So that's seen as a positive as well in here. So that's all looking fairly positive in here. So yeah, generally speaking, a positive from that, and that's seen stock indices globally and the futures markets push up higher this morning. Futures March highs, markets await mega cap earnings, US election. We've spoken all about that already. That's from Reuters. What else do we have? Some more articles from Reuters in here. Oh no, that one shouldn't be there. Let's move that along. We'll come to that shortly. Just looking through the overnight. So in here, Wall Street week ahead, stocks rally, face gauntlet of tech earnings. We've spoken that jobs data and the election as well. All of that upcoming in here. What else do we have for you? Oil price plunged 5% after limited Israeli retaliation attack on Iran. We've already spoken about that. So oil down, that's positive for stocks as well. A lower oil price, or high oil price, obviously seen kind of as a tax on the global economy. Oil in yen drop on Middle East strength. So yen obviously sometimes goes higher, so yen lower. Yen is seen as a safe haven currency, so maybe strengthening, but going lower in here because not needed as a safe haven. What else do we have? Going around the world in here. So stocks in Japan up with the lower yen as well in here, up 1.8% in here. Also in here, yen tumbles after coalition drubbing. So Japanese election in here seen negative for the yen, but then that being positive for the Nikkei. So that's also happened over the weekend. Not really impacting directly into US markets. Slightly lower, or just kind of not really unchanged on the European markets this morning. UK FTSE down and less than 0.2. The German DAX also less than 0.2. The French CAC up about 0.1. So fairly unchanged in here. And if we go to take a look at US futures in this morning, though, you'll see some relief from that lower oil price in here. So Nasdaq up significantly, nearly 2/3 on the overnight, and the S&P up over 0.5%. I'm going to just do this for today, but we'll park this probably as we go through the week, depending if it's getting any significant moves from the macro data. But pretty nailed on now that we're only going to get 25 basis point at the next meeting, and then pretty much nailed on, but not fully, but fairly nailed on that we get another 25 at the December meeting. But there is still a 27% chance in here that we don't get a rate cut in December. And if we go out to March, we've been focusing on the March meeting now. Remember, that's 4 meetings in, and the likelihood is when you get here, the biggest likelihood is only 3 rate cuts, okay, or fewer, okay. So there's only a 36% chance we get a rate cut. So by March, we're expecting the Fed to have paused or to have skipped a rate cut in here. So that's what the market's pricing in there. On the yield side, yields did push slightly higher, having paused in here towards the middle of last week, pushed higher on Friday, but then fell back slightly lower and nudging slightly lower yields in here this morning. And if we look on the charts in here, Still a bearish bias though on the bonds in here. So bearish on price. That's higher yield anticipation. And going to the indices, as I say, we've got kind of a conflicting view in here because just on the technicals. So on the technicals, on the S&P, we did breach this long-term trend line. It's been a really solid trend line. You can see drawn off these 2 points here, holds here as well. Remember, you can download these below where we are right now, and you can see breaking that trend line on a number of occasions last week. So a slight negative in here. So we do have like opportunist shorts as we've phrased it. But I think we're going to pop back higher in here today. I think it's going to be a slight consolidation. Obviously, we're already higher already. But on the NASDAQ, we stay bullish in here because we didn't take out the equivalent trend line. We're significantly above that trend line, dipped down and rebounded. But I'm not far off the actual recent highs on the NASDAQ. So the NASDAQ staying bullish in here. But if we go and look at the S&P, remember those. So first of all, the NASDAQ is right up at the highs now this morning. So we did actually make a new high on Friday and then back up towards those highs in here this morning with the higher price action due to that lower oil price and sitting not below the highs. So I think we could go and test the highs today, even though remember it's kind of been a bit of a, don't expect too much today is what I'm trying to say, right? We've got so much coming Tuesday through Friday, particularly Wednesday through Friday and next week as well. What I would say in here is, we're not going to get, there's no macro data today. There's no earnings reports of note in here today. We've got a huge amount coming up. So I do think we could go and test the highs, maybe slightly extend them, but it's not going to be a big upside day. And despite having that more negative view on the market chart, you can see it's more negative, right? We took out the support. That's that you can imagine. Right, I'll draw the line on. Actually, it's the same line. I'll draw the line on here that we've got in the reports in here. So it's this line here. It goes through here. And then we extend it out as a ray. And you can see in here, like when we touch this line, we bounce right off this line, and then we've been breaking that line. So that's why we turn more negative. And you can see there we have rolled more significantly lower here on the ES, on the S&P than the NASDAQ. NASDAQ last week rescued by Tesla in here. So that's why we've got this kind of negative spin. But you see in here today, we're pushing back higher. I think we can go back up. I don't not expecting too much to the upside, but we can go up to 5,900, I think, in here, just nudging up to there. But maybe an inside day, inside Friday's pattern today in here. More of a consolidation, positive consolidation than anything else. So that's the outlook for today from me. Remember in here, I'm going to put a quick note in here in the messages below in here, just to say, that we are basically 1 hour earlier in the UK and Europe for this week only, and then watching out for next week. But we'll come to that when we come to that. Okay, we've got a lot to get through this week, so I'm going to wish you all a great trading day. Take care, stay safe, and if you're say in UK and Europe and you picking this up on the recording, remember to come on 1 hour earlier tomorrow. If you're in the US, it's same, or elsewhere on the planet, it's the same time as usual for the rest of this week. All right, guys, take care, stay safe, have a great trading day. Bye.